Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover Series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by MENA, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, MENA puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let MENA do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, MENA offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the MENA app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. We're here to help you cut through all the noise and get straight to the key insights.
That's the plan.
Today, we're digging into some really rich source material. It's an audio broadcast from July 31st, 2025. It covers a lot: global finance, digital assets, even some big tech moves in specific regions.
Right, and our job here isn't just to tell you what happened. We want to pull out what's really critical, connect the dots for you, and explore why it matters, maybe what to watch for next.
Helping you stay truly informed, basically.
Exactly. In a world moving this fast, you need that clarity.
Okay, let's jump right in then. Big news from July 30th. Fed Chair Jerome Powell keeping the interest rate unchanged. Our source mentioned this wasn't a total shock.
No, the decision itself was anticipated, but the source's take on the reasoning behind it, that's where it gets interesting. They really leaned into the idea of political motivation.
How so?
Well, they pointed out that Powell himself is a Republican, right? But most of the committee members are Democrats. So according to our source, this dynamic strongly suggests the decision wasn't purely economic. They actually drew a direct line back to the rate cut in 2024.
Right before the election.
Exactly. And they noted how that was used in Kamala Harris's campaign materials. So they see a pattern, or at least suspect one.
Interesting context. So what did Powell actually say was the reason in his public address? Our source reviewed his YouTube statement, right?
Yes. His official explanation focused on the U.S. economy doing much better under the Trump administration. He mentioned improved labor markets, falling unemployment, the standard positive indicators.
But our source didn't buy it. They used the word bizarre, I think.
They did. Yeah, bizarre. Because from their perspective, looking at the data they track, especially investments flowing in, which they connect to tariffs, they felt a rate reduction was actually warranted.
So Powell's saying things are good, therefore hold steady. The source is saying things are so good, partly due to tariffs, that a cut made sense.
Basically, yes. That's the clash. The source felt Powell's reasoning just didn't line up with the underlying economic picture as they saw it. Made it seem illogical to them.
Okay, so what did this mean for the markets, according to the source, the immediate impact?
Well, keeping rates unchanged was seen as not that bad, manageable.
But a hike.
A hike would have been, and I quote, absolutely catastrophic for stocks, Bitcoin, the whole crypto space. They actually pinned Bitcoin's price at that moment, $17,739 directly on Powell's decision not to raise rates.
Wow. So holding steady was a relief, but the underlying tension is clearly still there.
Definitely. And this connects to a much bigger, more radical idea the source brought up.
Yeah.
The idea of completely abolishing the Federal Reserve Board altogether.
Whoa. Okay, that is radical.
They called it a potential game changer, even suggested it could be one of President Trump's biggest achievements if it ever happened. They went so far as to say it could even prevent future wars.
That's a huge claim.
Yeah.
Really questioning the fundamentals of central banking.
Absolutely. It sets the stage nicely for our next segment, actually, because we're seeing these very different visions for finance playing out.
Right, let's pivot to that. Digital finance. Starting with the U.S. perspective. The White House put out this big 166-page report, Strengthening America's Leadership in Digital Finance. What's the gist?
It lays out a very specific direction. First off, a clear rejection of CBDC's central bank digital currencies.
Okay, so no government-issued digital dollar, at least not in that form.
Right. The focus is very much on boosting U.S. leadership in the existing digital finance space. Protecting self-custody rights, your right to hold your own assets, is key. Same for developer rights under the Trump administration.
The stablecoins.
Strong support there. The idea is they can help maintain U.S. dollar dominance globally, maybe even use them in trade deals.
Interesting. What about regulation?
Pushing for clarity, but with tech-neutral legal frameworks, and ensuring a fair bank access for crypto businesses, which they contrasted with the previous administration's approach.
So more open, less restrictive.
That seems to be the vibe. Embracing DeFi, decentralized finance, and permissionless innovation. That's where anyone can build. No gatekeepers. The source made a point of contrasting this with permission blockchains, which they sort of dismissed as just software.
Got it. Anything else major in that report?
Yeah, developing tools to fight illicit finance, and this is important without cracking down on legitimate uses. They mentioned the ongoing Tornado Cash developer situation, like with Roman Storm, as context.
Okay.
Also guidance on market structure, spot trading, CFTC oversight. Encouraging blockchain innovation generally, and really prioritizing U.S. dollar competitiveness, especially with, tensions with BRICS nations.
So a very pro-innovation, pro-market, America-first approach to digital assets.
That sums it up well.
Now let's contrast that with Europe. Our source called the European Central Bank's approach to its digital euro the exactly opposite.
It really is a different world. The ECB is very clear. The digital euro will not be a cryptocurrency asset, full stop.
And their reasoning.
They state basically that crypto assets aren't backed or managed by central institutions, and that makes them inherently risky and unstable.
How did our source react to that?
They found it bizarre, scary, and funny all at once. Their counterargument was powerful. Bitcoin was created precisely to avoid central institutions, which they see as the real source of risk and manipulation.
So a fundamental disagreement on where risk lies.
Exactly. The source also mentioned a contact, Kristina, who apparently views the digital euro less as digital cash and more as a control tool.
But what features are the ECB promoting for the digital euro?
Well, they list things like it's a digital form of cash, universally accepted, free, usable offline, secure, private, value guaranteed. But, and this is the absolute key difference, it's all backed and managed by the ECB. Centralized control is the feature, not the bug.
Okay, that's a clear contrast. From these big policy debates, let's zoom into the tech itself. July 30th was a big day, the 10-year anniversary of Ethereum.
Right. And while our source definitely has a preference for Bitcoin, their mantra is Bitcoin, not blockchain technology, should be the next narrative. They did make sure to give Ethereum its due.
So what were the key milestones they highlighted over that decade?
They broke it down really well, showing its evolution. First, obviously, the launch back in July 2015 came after that big pre-sale, raising 31,000 Bitcoin. That funded the whole vision of a programmable blockchain.
Going beyond just digital cash.
Precisely. Then came its DeFi dominance. By now, 2025, it underpins something like 60% of all value locked in decentralized finance. It's huge.
And NFTs too, right?
Yeah, NFT dominance. From 2019 to mid-2025, it powered about 60% of global NFT transactions, became the default go-to on-chain platform for digital collectibles and art.
Then there were some major technical upgrades.
Huge ones. The fee burn upgrade EIP 159, part of the London hard fork in 2021. That started burning transaction fees, permanently removing ETH from circulation, made it potentially deflationary. We're talking over $400 million worth burned in 2021 alone. And then the big one, the proof of stakes, the merge. They launched the Beacon chain back in December 2020, and over 2 years moved away from energy-guzzling mining. Cut power usage by like 99.95%.
Incredible efficiency gain.
Absolutely staggering.
Right.
And that enabled better layer 2 scaling. By late 2024, these roll-ups, Arbitrum, Base, Optimism, they secured $60 billion in total value locked TVL. Massively boosted transaction speeds and cut costs.
Makes sense. What about the people building on it?
That's the developer ecosystem. By 2024, largest blockchain developer community globally. Over 13,700 devs contributing to the mainnet code. That's a powerhouse.
And this translates to real-world use.
Yeah, market adoption and network usage. Market cap's been trending up. You've got giants like BlackRock, JP Morgan, Visa building on it. SEC approved spot ETFs in 2024 with in-kind redemption, too.
What does in-kind redemption mean, practically?
It means investors holding the ETF shares can actually swap them directly for the underlying Ether, not just for cash. It's a closer link to the actual asset.
Got it. And network activity.
Huge. Processing around 1.6 million transactions daily in 2025, over 127 million active wallets. Shows broad smart contract usage.
And finally, the anniversary itself.
Right, the global community aspect. The 10th anniversary was celebrated globally live stream, over 100 meetups, 6 continents. Really highlights that borderless, engaged ecosystem.
Quite a journey in 10 years. Our source gave some current market numbers, too.
They did. Ethereum market cap at $459 billion. Still way behind Bitcoin's $2.35 trillion, of course. Ethereum dominance was pumping up, though, to 11.90%, while Bitcoin was at 60.85%.
And the overall crypto market health.
At the time of the broadcast, the global cap was $3.92 trillion, down about 4.3% in 24 hours. The source expected a bit of a recovery, a bump up, when Western markets opened.
ETF flows.
$298.6 million for the day, which, interestingly, the source felt was lower than expected, maybe half what they thought it would be, and they link that back to the Fed holding rates steady. Less immediate excitement, perhaps.
Interesting link. What about DXs versus CEXs, decentralized versus centralized exchanges?
Big shift there. DX dominance actually crossed 50%, came in at 50.13%, suggests maybe only 30-35% of that volume might be on centralized exchanges now.
Wow. Who are the top DXs?
CanKickSwap was leading by a large margin, $7.33 billion in 24-hour volume. Then Uniswap, $3.54 Bs, Sloyd, $1.27 B, Radium, $1.14 B, and Droma, $745.95 Ms. They noted EcoA had dropped out of the top 10.
Where are the stablecoins living mostly? Which blockchains?
Ethereum still dominates for stablecoins, $132.62 billion market cap there. Tron is second, $82.68 billion, but that's largely Tether, USDT. Then Solana, $11.35B, Binance Smart Chain, $11.07B, and Hyperledger, $5.04B.
Yeah, two significant pieces of news highlighting just how fast things are moving in the Middle East, particularly around digital transformation and AI.
What's the first one?
TELUS Digital is opening a new office in Dubai.
Okay, TELUS Digital, what do they do? They focus on AI-powered customer experience solutions and helping businesses become more efficient. They see the Gulf region, especially Dubai, as a key growth area because the demand for digital transformation is just soaring there.
So Dubai is the strategic hub.
Exactly. They offer the whole package: strategy, design, AI automation, customer experience modernization, implementation, ongoing support. They use their own platform called Generata.
And why the Gulf specifically?
Well, the region's got this great mix of innovation-friendly infrastructure, government policies really pushing digital, and just massive public sector investment. UAE, Saudi Arabia, Qatar, it's fertile ground.
Which industries are they targeting?
Pretty broad. Energy, transport, healthcare, education, finance, telecom, media, retail, hospitality, really focusing on using AI to solve specific problems in those sectors.
Sounds like a significant move tapping into that growth. What was the second piece of news? You said it was massive.
Yeah, this one involves two huge names, Cloudera and Aramco in Saudi Arabia.
Okay, the data company and the oil giant. What's the collaboration?
They've signed a Memorandum of Understanding, an MU, to work together on AI-powered solutions, specifically for the digital transformation of Saudi Arabia's oil and gas sector.
What does each bring to the table?
Cloudera brings the hybrid beta expertise managing data across different clouds and on-premise systems. Aramco obviously brings deep industry knowledge.
What are the main goals?
Key things are localizing advanced tech within the kingdom, driving sustainable digital growth, and this is a big one, significantly upskilling Saudi talent. They're planning tailored training programs in data engineering, data science, analytics.
So building local capability too.
Absolutely. Making modern beta tools widely accessible. They're also planning joint R&D in AI, big data, specifically for energy applications. Cloudera also stressed responsible AI deployment and supporting Saudi Arabia's broader digital economy goals.
That sounds like a really strategic partnership for the kingdom's transformation plans.
It definitely looked that way.
All right, let's bring this back to you, our listener. Our source had an Ask Me Anything segment, and they gave some really practical advice on what economic indicators to track. Actionable intelligence time.
Yeah, this is useful stuff. They recommended focusing on two main data points for August and probably beyond. First, CPI, the Consumer Price Index. That's your main inflation number.
What's that at?
August 12th. Released by the Bureau of Labor Statistics, BLES.gov is the website. The source's view, remember, was that inflation has been dropping drastically, especially if you factor in tariff-related information.
Okay, CPI on Aug 12th. What's the second key date?
August 20th. That's the next FOMC meeting, Federal Open Market Committee. That's when the Fed board meets again to decide on interest rates.
So the two big ones, inflation data and the Fed's rate decision. Are there other things the source suggested keeping an eye on?
Yes. They mentioned specifically tracking tariff-related information. You can find that on the U.S. Treasury website. The source did note you kind of have to dig and sort it yourself by country, industry, inflows, outflows.
But it's important because...
Because, according to the source, it directly impacts Bitcoin and crypto prices. So worth the effort if you're in that space. And generally, just keeping tabs on the regular economic data reports from the BLS website. They come out pretty much weekly.
Seems like a lot to track.
Well, the source actually gave a good practical tip. You don't need to spend hours on these sites. 10-15 minutes might be enough to get the headlines. And you can always copy-paste the text into an AI tool like ChatGPT or Grok to get a quick summary.
Smart shortcut. Okay, this has been quite the journey today. We've covered Fed decisions, contrasting visions for digital finance in the U.S. and Europe, Ethereum's big anniversary, the crypto market pulse, and major AI initiatives in the Middle East.
It really covered a lot of ground. And maybe, as a final thought to leave you with, considering everything we've discussed, the huge impact of centralized decisions like the Fed's versus the whole philosophy behind decentralized innovation like Bitcoin or Ethereum, what do you think is the more reliable path forward for stability and growth in this digital age? Is it sticking with the institutions we know, or is it embracing these newer permissionless peer-to-peer systems more boldly? Something to mull over.